Pay me, pay me, pay me my silver now. Pay me or go to jail. Pay me my silver
Hey guys,
now.
roadtoroota.com. Huge things happening behind the scenes. I'm going to get to what's going on at the banks right now. Very interesting earnings reports and what they are not telling you that they told us last quarter, but they're deciding not to tell us this quarter. It's quite hysterical. Listening to the conference calls of earning reports of banks, they must tell these analysts certain things cannot be asked because nobody's asking about the unrealized losses. It's really, it makes you wonder just how deep this rabbit hole goes. Is everybody involved? Or are these earnings calls managed? Are they pre-recorded and then deleted? Who knows? But for example, Citibank didn't disclose what their unrealized losses are. Bank of America did, and holy crap. All right, anyway, let's start with silver. We'll move on to the banks, and then we'll move on to the end of the world. Okay, silver is rigged, so this page does not matter. The price of silver does not matter, except when you're analyzing it from a rigged perspective. So the rigged perspective would be using the commitment of traders report, looking at where the criminals are, where the tech funds are, where the bullshit is. So let's take a look. Right now, I've been screaming, anything below the moving averages is the buy spot. And then the question is, after silver goes past the 200, 100, and 50-day moving averages, that's when the game changes. It's like a football game. One team has the ball. When it goes past a certain yard line, the other team has the ball and comes the other way. But the question lies in, is each team going to play the same way they've always played for the past 50 years? That's what we're waiting for the end of. The end of manipulation, all of a sudden, it's game over. And when it might be this time. I mean, the rest of the world's blowing up. Who knows? But silver right now today is up 33 cents, but it's still below the moving averages. Moving averages are about 23.30, 23.32, right around there. What happens after it hits those moving averages is all the tech funds who had to go short when it goes below the moving averages, that's when they turn into buyers. And historically, as the tech funds buy, the price goes up until the commercials, the big riggers, short into the rise and then slam it down artificially. Computers and derivatives run the whole show. The question is, are they going to do it again? Has anything changed? Are there people in the know? Hopefully everybody in silver is in the know now. So you buy below the moving averages, and if you're a trader, you sell above the moving averages, just like the banks do. Never, ever go short. I beg of you, never, ever go short. Why? Because you have unlimited losses if you're short. So let's see who's short. Obviously, the big criminal banks are short. They're still short, but they're not as short. The top 8 are not as short as they usually are. They've whittled it down over the last couple of years. But what happened last week, the last commitment of traders report right here. The managed money, that means the tech funds who are playing those moving average games, went short 16 million ounces. 16 million ounces of silver they went short. So by definition, they're going to have to buy those back. When do they buy it back? After it crosses the moving averages, okay? So right now, the managed money short position is 34,800 contracts, which is, it's 5,000 a contract. So that would be, well, come on, Bix, 165 million ounces short. And then there's the longs. Remember, if you're a long, you can always stand for delivery. At any time, you can stand for delivery if you're a silver long. Now, they might get mad at you. They might take you out. They might destroy your position. They might require you to deliver in London, which a lot of the JP Morgan stuff is being done in London. But all of the longs can stand for delivery. That's 126,971 long contracts, which is, top of my head, what is that, 750 million ounces? They can all stand for delivery. Now, is it possible that these guys can deliver it? Well, the COMEX, the registered silver, there's only 37 million ounces. So clearly not everybody can stand for delivery without something else happening. Now, the total in the COMEX vaults is 271 million ounces. That's getting a little closer. Not close enough, obviously. But that's silver held by the big traders. I mean, what big trader in their right mind would have a short? See, it's only the shorts that have to deliver. Would keep their silver in a COMEX vault and give it away at a low price. If I was 271 ounces of physical silver owned by longs, I'd hang on to it. You don't have to deliver unless you're a short. So the question lies, of this 271 million ounces, how many of those are hedged, pledged as a short? I don't know. Somebody knows. The CFTC should know, but they're not saying, obviously. The COMEX, the CME, is not going to tell you how many of those ounces are hedged, how many of these are hedged with physical. So of the 650 million ounces of silver that are long on the COMEX, how many of those have naked shorts attached to them? It means they'll never be able to deliver. They might be able to pay up in cash, but could they really? If they can't deliver and everybody's standing for delivery, what's the price of silver? If nobody's going to short into the rise, what happens to the price of silver? It goes off the charts. And are you going to stand in front of the silver freight train? There's not many banks that could. JP Morgan can and has done it. The 2011 rise to $50 was 100% a JP Morgan manipulation move. They brought it up from $20 to $50 and then brought it down by putting Bill Daley, the head of their SWAT team, Jamie Dimon's SWAT team, as Barack Obama's chief of staff. That's how important it was to rig the silver market in 2011. You wanted to get all the weak hands in and then destroy them, get them out of the market, and create an artificial bear market, which is what we're coming out of now. So will this game end? Someday. It didn't end yesterday. It hasn't ended today yet. But my take is they're going to declare force majeure. Force majeure, I'll get to that in a second. But anyway, that's what's going on. So of the 650 million ounces that can stand for delivery now on the COMEX, the COMEX only has 37 million ounces in inventory. But that's been like that forever. And of that 650 million ounces, I would say 90% of it is the big banks. A tiny portion of it is like real traders. 90% of this crap is run by JP Morgan, Citibank, and by the way, Bank of America, who leased over 1 billion ounces from JP Morgan on the rig deal that had to be done because Jamie Dimon and JP Morgan were in purgatory. So Bank of America had to carry on the torch of silver manipulation in the lovely United States of America. Oh, by the way, Bank of America's unrealized losses on securities rose to 131.6 billion ounces. 132 billion ounces of unrealized losses. Wow. That's a big number, especially because last quarter it was only 106. So what, and they even say it's all U.S. Treasuries, what changed? And we could do a little back of the envelope calculation here. The 10-year, for example, rose in the last quarter from 3.74 to 4.8. So a little over 1%. So just a 1% rise in the 10-year and corresponding 5-year, 3-year, things like that, translated into a 30% bigger loss on Bank of America's derivative book. So what happens if it goes up another 1% or another 1%? How many losses are they going to be sitting on at the time when people lose confidence in banks? And that's coming very fast. We saw it in January, February, March of this year. February and March, oh, that was just a standalone bank. That's not a standalone bank. Everybody's going to lose confidence in the banks. That's when these unrealized losses turn into realized losses. And it's ugly. By the way, okay, let's take a look how big this might be. JP Morgan Chase had unrealized losses of $40 billion. How could JP Morgan have only $40 billion when Bank of America, which is a much smaller bank, had $130 billion? It's derivatives. It's all in the derivatives. Bank of America held $16 trillion right here. This is the OCC derivative data in the OTC contracts. Hold on, where is it? Page 19. Yeah, right here. Interest rate contracts. This is part of the stuff we're talking about. How much of these derivatives are related to interest rates? The majority. 70%, except strangely, Goldman Sachs is 86% is related to interest rates, and they're not really even a bank, which is interesting. Wells Fargo is also at 86%. By the way, Wells Fargo and Citibank refused to declare how much their unrealized losses are. But they have to declare them at the beginning of November on the 10Q report, is what I'm hearing. So they gave themselves a month. So the losses are, let's see here. Bank of America, $132 billion unrealized losses. JP Morgan Chase, $40 billion. Citibank did not report. Again, $40 billion for Jamie Dimon. Why? Because he has $40 trillion. $40 trillion in interest rate derivative contracts. Now, remember, so, okay, JP Morgan didn't lose $200 billion on their interest unrealized losses, right? They didn't, because they didn't have to cash in any of their derivative, because they had all these contracts, interest rate derivatives. But somebody had to lose that money. Somebody is losing. For every winner, there has to be a loser. That's why they say, oh, these total derivatives of, $58 trillion that JP Morgan has, they all offset. It's no big deal. No. Somebody loses and somebody wins. That's why third-party risk is so important. Who can take these kind of hits? I don't know. I guess we'll find out at some point. Clearly, Bank of America isn't fully hedged on their interest rates for their unrealized losses. And again, unrealized losses only become realized losses when they have to sell the underlying asset, which, as a matter of fact, they did. They had about $603 billion held to maturity securities, shrinking from 614. So they literally sold 11 billion of these assets at losses. And they go back down. All of these unrealized losses are on government guaranteed securities. So don't worry about us. We can hold it to the end because they're government securities. They're pretty much guaranteed because the government can print its own money. Okay. But here's the problem. As you need money, as your bank fails, you're going to need to raise capital. The only way you can raise capital is sell these things or take out or issue. How about issuing more bonds on your own bank? Now, the banks had a great quarter. Don't get me wrong. But all of them are literally treading water. For example, this cracked me up. Where is it? Wells Fargo and JP Morgan had to sell $13 billion worth of bonds after their earnings. So you come out with the earnings. Oh, everything's fine. Don't worry about it. Oh, by the way, we have to sell these bonds to raise more money at probably the highest interest rates of any bonds that they're paying. I think they're paying 6%. That's how desperate they are to get money. Even after all the bailouts and all the reverse repos and everything. It is insane. JP Morgan priced $7.25 billion. Wells Fargo, $6 billion. I think they paid like 6%, which is crazy. High yielding bonds. Where's the percentage? I don't see it. But, I mean, if you're so sound and so secure, why the hell is JP Morgan and Wells Fargo issuing bonds at this point in time with these high interest rates? Unless they think they're going to go a lot higher, which would destroy their unrealized losses. It is a mess. The financial system is a mess. And, okay, so Citi decides not to declare after their Friday earnings call. And I listened to the earnings call. Nobody even asked about unrealized losses. It was insane. And then they come out with this. Citi Treasurer Mike Verdassi to depart after 33 years at a bank. Bankers do not quit when things are great. Bankers quit when the shit is about to fall apart. Citigroup's treasurer Mike Verdassi is departing to pursue other opportunities after a 33-year career at the Wall Street giant. Verdassi has been treasurer for 6 years, during which he managed the firm's $2.4 trillion balance sheet. Blah, blah, blah. As treasurer, Verdassi amassed $507 billion worth of securities portfolio that's generating 3.52%. So everything now is yielding 6, 7, 8%, except Mr. Verdassi loaded up on treasuries and they're only getting 3.5%. They're losing to inflation. Again, bankers don't leave when things are going great. Bankers leave right before they implode. And oh, by the way, right after the earnings call, Citigroup lays off. Firm fires 2,000 employees. Total job cuts now at 7,000 employees. Again, they don't cut back when things are going great. They add people. Things are imploding in the banking system. And this is the biggest problem. This right here. The derivatives held by Goldman Sachs, when you hear about the derivative problem, it's a problem overall, everywhere, right? Everywhere. But the biggest players are a handful. And that handful are massively bigger. I mean, look at this. JP Morgan Chase with $58 trillion. Goldman with $57 trillion. Citibank with $55 trillion. Bank of America with $23 trillion. And Wells Fargo with $15 trillion. The number 6 bank is State Street Bank. It jumps from 15 down to 2. Down to 1. Literally, it is so top heavy. These top 10 banks, any one of these goes down, and we know these names: HSBC, Bank Mellon, PNC, U.S. Bank, State Street, Wells Fargo, Bank of America, Citibank, Goldman, and JP Morgan, and then you lose everything. Everybody loses everything. These are too big to fail banks. I would say the top 20 are too big to fail. But who knows? I guess we'll find out in the near future, right? So that's where we are. Quick other things. U.S. car makers slam Biden's fuel efficiency plans. Biden's trying to get everybody into electric cars and then get rid of electric cars. So the Biden administration is absolutely destroying the automotive industry in the United States to get everybody to go into electric cars, just like California and that freak Gavin Newsom. First of all, as we know, if you're a silver investor, there's not enough silver to make the electric cars that the Biden ESG thing want to make. There's just not enough silver. Number one, solar panels, their other pet project, will use all the silver come 2050. So that leaves no silver for your cell phone, for your flat screen TV, for smart bombs. Now, you're going to hear some about smart bombs using 400 pounds of silver or something crazy like that. I don't know if that's true. I haven't seen anywhere proving that. It might have been 400. No, it was like 400 pounds of silver. Something crazy like that. It was a rumor started, and it might be true. I just have never seen the official documentation. I've heard a lot of smart people talk about it, but I don't know. First of all, I don't think the U.S. government would ever let you know something like that. And even if they did, there's not that many smart bombs. It comes out to like 2 million ounces of silver, which is nothing. So that horse doesn't really do much to me to get me excited. I know the military uses a lot of silver. They have a lot of electronics in all their gear. Anything that has electronics usually has a little bit of silver in it. But, the smart bombs, we're going to use up all the silver in the smart bombs. No. There's not enough smart bombs. But it sounds kind of fun to talk about. Anyway, yes, cars, all cars, not just electric cars. Electric cars, we don't know how much silver's in it. They'll tell you like ounce and a half or something. It's not that. There's a lot more, but they don't talk about it. Regular cars have a massive amount of silver now with all the electronics that get added. And for everything, I mean, everything's electronic in both cars now. So, but very interesting at the end here, car makers are also unhappy with plans to change the way regulators calculate the fuel efficiency of electric vehicles. According to the industry, that change would significantly lower the numbers and would devalue the fuel economy of electric vehicles by 72%. Basically, that's saying, okay, you don't burn gasoline per se, but you do use energy, which is made in various ways, including burning fossil fuels. So there is a footprint, but they're changing that. I think they're going to try to first get rid of internal combustion engines, then get rid of electric cars so that you own nothing and like it. This in turn could affect demand, blah, blah, blah. All right. Trump is surging in the polls as well. He should. Anybody who doesn't understand what's going on with our elections, we won't have an election next year. Just so you know, that's why the Democrats have trotted out Joe Biden as the guy, and no other challengers are allowed to even be talked about because there's not even going to be an election. Just be prepared for that. So in order for there not to be an election, they have to do something big. That's where this comes in, the war in the Middle East. Iran is going to jump in, and everybody's going to say, oh my God, we got to save Israel. And voila, the U.S. jumps in, and Russia jumps in, and China jumps in, and poof, World War III, nukes go off, everything just turns into a mess. Oh, but voila, we don't have to have an election next year because it's just too chaotic. And by the way, the silver market has shut down, the bond market has shut down, all the stock market. If you have money in the stock market, just kiss it goodbye. Stocks, bonds, anything that's not in your own, crypto's not in your own possession, silver not in your own possession, adios. I hope this has sunk in. Anything not in your own possession, good luck. Everything else, protect with guns. That's my take. Anyway, that's what I got for you. Join the private road to Readies. We talk about the things I can't talk about on YouTube, and there's a lot. There's a lot. And we're currently giving away a Veritasium token. It's your hedge. If you're a crypto person who doesn't have any Veri, you got to get some Veri. It's a hedge against Gary Gensler getting his way. Maybe. Who knows? But something is going on in the background. And they want to transition out of this current system and go on to a new system that kind of feels like the old system, like have a stock market but not have the criminal bankers in it. That's what Reggie invented. And that's why they shut him down and confiscated and froze the assets of Veritasium. 98 million of the 100 million tokens have been frozen with no explanation. And they still sit there frozen. So, lots to happen before then and now, but it's great to have in your vault with your silver if you think we're going to come out of this and at some point start trading again on exchanges that don't have the middlemen in there anymore. No more JP Morgan, no more Citibank, no more Charles Schwab, no more Fidelity. All the middlemen gone, peer-to-peer transactions. That's what Readies invented, and it's an amazing thing. But That's what we're giving away. One very token with every subscription. That's all I got. This is Bix. I'll talk to you later.